What's going on, everyone? Happy Monday. Another day, another dollar, hopefully. We'll see how it goes. So for those of you that are new to the stream, my name is Sean Ryan. I am the co-founder of Predicting Alpha, and you are watching our live market analysis stream. So every single day, Monday to Friday at 10:30 a.m. Eastern Standard Time, we come live here on YouTube to showcase what's going on in the market, break down a few trades, help you guys out if you're looking at any trades yourselves, and really talk about what's moving in the market these days, right? One of the things that we really try to emphasize is when we see a piece of news, when there's something moving, we want to dig a little bit deeper, really understand how the market is reacting to this, and see if we can find any opportunities hidden beneath the surface, right? Behind the price chart. Is there any opportunities we can find if we start to pull some data that the average person might not typically have access to? So that's really what we're going to be going over in this live. Before we get started, I wanted to share something that I think all of you could get a lot of value out of. So today on LinkedIn, I posted an article talking about relative value. So something that a lot of you might be interested to hear about is when traders are looking at their books, most people are like, is this company cheap or expensive? But you might be surprised to find out that a lot of the times, professional traders are not just looking at one asset and saying, is S&P volatility cheap or expensive? What they're doing is they're saying, well, here's S&P volatility. Is there another asset comparable to S&P that's trading differently? And is there maybe a trade I can put together looking at both of these assets and trading the difference between the two? And that's really what relative value is all about. So if you go to LinkedIn, I'll actually share a link to this article in the chat. And you can take a look at that when you get a moment. It's a pretty cool article. We actually talk about a trade that we're in right now. Ned Herman in the chat and my business partner Jordan are the ones managing this position. So if you take a look at that article and you have any questions, I'm sure Ned will be happy to chat with you about that. So taking a quick look at what's moving in the market, I came over to the global dashboard. First thing at the top was just top news. I opened up the article and let's see what we can see moving in the market today. So apparently, kind of interesting, there were a lot of outages with Google services recently. And if we take a look at the market, apparently Alphabet was down about 1.4% pre-market today, which is a pretty big move for a company of that size. As we can expect, Pfizer was on the move today as well. I'm pretty sure vaccines are being delivered now for them, right? They are already getting started. I believe the first vaccines from Pfizer were in Canada. They arrived in Canada today, which is a really exciting news. Last week, we spent a lot of time talking about Pfizer, so we're not going to do that today. But what we really, for those of you looking at Pfizer, we really want to take a look and see, okay, how much of this is priced in? How much uncertainty is left in the future? Because imagine that we know they're going to capture 50% of the vaccine marketplace. This is how much they're going to make off of it. Well, the future value of that is going to be priced into today. So that's why, for example, last week when we saw the approvals come out from the FDA allowing the emergency response from Pfizer's vaccine, the stock actually dropped. So we want to keep that in mind when we're taking a look. EA came out, announced a deal to buy Codemasters for $1.2 billion in cash. There was apparently, TTWO was also taking a look at that purchase. So it might be interesting to take a look at what's going on with those two stocks in the pre-market today, or not the pre-market, but right now in the morning. Airbnb had their ratings cut, so obviously been on a tear, but they're basically saying this company is going to underperform. SPCE did not have their latest test flight as planned. Huge drop, 14% pre-market. That might be something worth taking a look at. And as you can see, there's a few other stocks here as well. It's really handy to have access to sort of what's going on at a global level right off the bat when I come into my terminal. So a couple of things that we want to take a look at today. We're going to do a quick scan. Nothing really popped out to me this morning in particular. Reason for that is, as we move into Christmas, things start to slow down. So for example, we don't have any earnings that we're looking at today. That's a big part of our book typically. So we're going to be doing a scan, seeing if we can find any hidden gems that maybe were left out, from my original scan. And if you have any trades that you're looking at, share them in the chat and we will take a look at them together, see if we can find any opportunities, maybe structure out a trade together. Now, if you're new to Predicting Alpha, if you haven't subscribed already, please hit the subscribe button. Make sure to support our channel. We do this 5 times a week, plus release a ton of high value videos for you guys. And your support means the world to us. It allows us to keep making this and, keep having conversations with all of you. So thanks a lot. Okay, let's head over to Vol Insights. One that I want to take a quick look at this morning is actually, let me just give a quick refresh to the terminal. One of the things that I want to take a look at this morning is FDX. So FDX, FedEx, they have, one second here, guys. Terminal's just giving me a little bit of lag. There we go. Okay, so let's take a look at FDX. Obviously, some big news around the company recently. They're going to be doing a whole bunch of the deliveries, right? FDX and UPS are the ones who are going to be distributing the vaccine across North America, really. So we can expect to see some increased volatility around them. But I was talking with Jordan this morning, and he was saying that the vols for it are a little bit too pricey. So it's worth taking a look at. So off the bat, first thing we can see is what's the market implying here, right? So stock moved 1% today. Market's implying for 30 days a level of 48% volatility, which comes to about a 3% move a day, right? We can see that over here. The 1-day implied move is just over 3%. And we're thinking that volatility is going to be a little bit lower, maybe around 2% a day, right? And that's given our forecasts of volatility, the models that we use to come up with, paint a picture of what could be happening in the future. So off the bat, I'm thinking, let's dig a little deeper, understand really what the implications are for FedEx, and see if there's any opportunities for us to maybe structure out a trade here. We can also see that in the near dated future, there's huge skew to both sides. The market's expecting, basically saying the most likely thing is there's not going to be any massive move in one direction. But we could get this huge move to the up or the downside. So what I'm thinking off the bat is it confirmed that FedEx will be handling those deliveries? We'll take a quick look at the news here, and we will see if we can find anything. First thing to note when we come to the news and sentiment is for FedEx, retail sentiment is 100% bullish. Everybody thinks the stock is going up in the retail space. That's based on what we're seeing on social media. And we can also see from the news that the news is extremely bullish too. So if we look at the keywords in articles being published about FedEx, it's 86% bullish. Looking at the option activity, 1.0 is the average daily volume. And right now it's 10:38 a.m. and we've already seen about 10% of the volume. So nothing really too out of the ordinary for that, to be honest. But something still worth noting is we're not actually seeing that massive spike in option activity that we might expect to see, given the level of retail sentiment. So let's take a look here. Companies to watch. This is saying FedEx. Let's take a quick look, see if we can find anything. You guys have any ideas about what's going on with FedEx? Anything you want to share? Is it a stock that is on your radar today? Okay, let's just take a look at a little bit deeper into the company here. So if we take a look, number of articles being published about the company, it's actually slightly up. So it's actually been in the news for quite some time now, but even though there's been this increased activity around the company, we're still seeing it slightly increase. More and more news is coming out about this company. It's more and more in the media eye. So we want to keep that in mind as we look at it. There is a lot of eyes on this stock right now. Taking a look at the volatility cone, if we take off the max and min to get rid of those outliers, we can see that the near dated volatility is significantly above the third quantile. What does this mean? Well, it means that for the near dated options, we are seeing a level of volatility significantly higher than what we see 75% of the time. So we are seeing this massive, massive volatility. Taking a look at the skew analysis, we can see that there is a huge call skew and put skew. and looking at our realized distribution, we can see that we do get the occasional outlier, but it's highly unlikely that we're going to see this huge pop. So we can see that implied volatility extremely high right now, but as we move out into the future, it does taper off, which leads me to think maybe there's also an event that we need to be aware of. So let's come over to earnings scanner here, and there we go. They actually have earnings in 3 days. Right, so that's something that we need to be aware of. Now, I'm going to share a couple of the concerns that I have going into this event, things that we need to keep an eye out for. So off the bat, we can see that the implied move is higher than what we see on average, and it's significantly higher than the actual move the market implies on average. So the market's expecting some volatility around the earnings at a level that we typically don't see. Looking at the straddle P&L, it's actually about zero. So there's been a lot of winners, a lot of losers. There's no clear historical mispricing of volatility here. Sometimes they are overpricing it, sometimes they are underpricing it. If we take a look at the calls, negative, puts, positive. So we're actually seeing a lot more down moves than we are up moves in this company. Now, one of my concerns going into this event, before I just say, wow, this is pricey, let's sell it, is we want to see what is going to happen to the guidance for this company. One of the things that drives a lot of volatility around earnings is changes in guidance, right? Now, obviously, we try to forecast that as well, and we're aware of the fact that they're going to be handling this COVID vaccine distribution, but I'm interested to know how much will this really impact their forecasts of future earnings. Is this a high margin product? Is it going to be subsidized by the government? How does it compare relative to the other deliveries they do? Right? This isn't a startup. It's not like if $1 billion in revenue gets added, this company fundamentally changes drastically. Right? It's still a huge multi-billion-dollar company, and we need to take that into consideration. But given everything I'm seeing here, I think vol's a little pricey here, right? There's I think the price that people are paying for protection here to the upside and to the downside it's perhaps a little bit too much, and we might see that play out over the coming weeks. So what I would be doing here, if I were to be structuring a trade, is I would probably be selling a straddle, right? If I were to pick up wings, I would be picking them up pretty far out. But we need to keep in mind, like vol, there's both call and put skew, meaning that when we go and structure a trade, we're going to be paying a lot for those wings. And that's something that we really need to keep in mind here. If we want to do, let's say, an iron condor on this, those wings are going to be pricey, and that eats up a lot of our edge. So for those of you who are willing to take on the risk, just sell vol here, no pants. It could pay off. It could be a big winner. So let me know what you guys think. Are you going to be looking at selling vol around here? Is there another trade that you think we should be looking at structuring? We could maybe take a look at, if you have a directional bias, we could look at structuring out, a 132 or a vertical, something of that nature that could be pretty good for FedEx. I personally don't have a directional bias. I think their guidance will be good. So maybe to the upside. Let's go take a look. Sean's asking, what do you look at to determine selling the weekly versus the monthly? So there's a couple of things that we take into consideration there, right? So number one is, where's the vol, right? So what we can see is the market's pricing in a ton of volatility right now. So we can see this by looking at the term structure here, right? We can see that vol in the near dated future, or in the near dated vol, is 62% implied, and then it tapers off 6 months out to 40%, right? And between the 10 and 20 day, we're seeing a 10-point drop, right? This is the earnings event being priced in up here. So if I want more exposure to that earnings event, well, then I'll trade up here. The other thing I think is, what exactly do I want exposure to? Do I want exposure to the level of implied volatility or the realized moves? When I trade short dated, there's more gamma, right? Meaning that if we get a big move and I'm long vol, I'd make more money being short dated than long dated. Let's see how we can think about this. If I pull up this whiteboard here, think about it like this. imagine that we have this point here. This is today, and then this needle is like this. How can I explain this? If I want exposure to changes in implied volatility levels, right? Let's say this is a couple point change in implied volatility. Well, the near dated options are only going to see a small change, but the far dated options will see a big change. That's if I'm trading the level of implied volatility. But if I want exposure to the moves, well, then I'm going to trade shorter dated. Does that make sense? I can clear that up a little more if you'd like. But let's say we have some directional bias on FDX. One more thing that I take into consideration for trading the weeklies versus the monthlies is liquidity, right? There tends to be more liquidity on the monthly options versus the weekly. And if there's too little on the weeklies, then I'm going to be forced to trade the monthlies simply, for crossing the bid and making sure I don't get stuck in a position. Michael's asking, do you think E-Trade's a good platform or should I switch? Michael, I don't know a ton about E-Trade, to be honest, but what I would look for is a couple of different things. Number one, how much commission are you paying, right? How much are you paying per contract? Are you paying like an initial fee to get in or out of the position? These are things you want to account for that most people, when they first start out, they actually don't think of this. Like, I remember when I first started trading, I was using TD Waterhouse, paying $10 commission in and out of a trade. And I'd look at my P&L after even like a month. All my money went to the brokerage. All my returns went. Hey, thanks a lot, Sean. Okay, so let's take a look here. Let's say we wanted to trade, something for the earnings event. We think, let's say the stock is going to move up. Well, we might look at trading a 132 fly. So the first thing we're going to do is price out the straddle here. You can see the straddle is going for $22. So let's just call it 20 here for simplicity's sake. So if we go up, if we structure, we go buy 132 unbalanced fly, right? So the first strike, we'll put it at 292. All right, okay, I guess 290 we'll start with. Let's go up to 310. And then we'll go up another 10. So we're going to go up one straddle price and then a half straddle price for our hedge. So then we're going to go up to 320 here. Let's take a look at this trade. Okay, so we're going to see, we're risking about, on 10 lots here, we'd be risking about $3.5 grand with a potential max reward of 16 grand, right? So this is a little over 5-to-1 risk reward, right? You're looking at risking 1 to potentially make 5. And this is why when we see that call skew, if we have that directional bias, we can structure a pretty cool trade. Now we give up the chance of a massive move, right? Like if this thing were to go from 290 up, 30%, we'd be missing out on that. But if our view is just that this thing is going to have an up move, well, we're not always necessarily thinking this thing's going to the moon. And this is a way that we can take advantage of those more expensive out of the money calls to structure this trade. But in order to do that, we need to be able to look a little bit beyond the price chart and see, okay, where are options cheap? Where are options expensive? How does the implied volatility level change across the chain, right? Across different strikes, how is the implied volatility changed? This bleeds into how we go about any structure. When you're looking at a calendar, you want to see how do the implied volatilities level change through time. In this case, with the 132, we're looking at how does it change across strikes. So I hope this really highlights the importance of having access to that kind of data and really knowing your product well, because it allows you to go find trades like this, right? If you have that you could probably structure something similar to the downside as well. So and what we have to thank for that is this skew analysis, right? We can see that the implied vols for the out of the money calls and for the out of the money puts are elevated relative to at the money. We want to be able to take advantage of that kind of thing. And knowing your product and how to structure it to take advantage of what you're seeing on the chain is exactly how you do it. So what else can we take a look at today? Any other stocks that you would want me to take a look at here, guys? Let's see. Just throw in some option volume. Take a look see what we can find here. going to put in a price filter. I'm just doing a little filter right now, a scan to see if anything pops out. BBBY. Let's have a look at what's going on there. Let's see. 90, 60. Anyone know what's going on with BBBY right now? Because that's a pretty high level of vol. You can see the 30-day is super elevated. I'm assuming there's an earnings there. Let's see if we can see any news happening around the company. Retail sentiment super bullish once again. News is 50-50. So that gives me a sign that I don't know if I'd be betting on this thing going up, to be honest. Let's see what we got here for news. Approved additional $150 million share buyback program. Okay. Among the underlying components, noteworthy option trading volume today. Okay, so massive increase in option volume. New options became available. Cool. What about if we go to StockTwits? Do we see anything for BBBY? Let's see what we can find. Bed Bath & Beyond. So retail sentiment here is... Man, StockTwits is so slow sometimes. It's just one of those platforms. It takes forever. Okay, 85 on StockTwits. Message volume is creeping back up again. And price is down a little bit. So, what can we do here? Well, if we were to go a little bit further out in time, there's still a little bit of call skew going on here. Might make our wings a little bit pricey. But this is looking like an opportunity to just be short vol, right? If we go to earnings, let's see when the next earnings is for it. January 7th. Okay. Well, we can see that straddle P&L is actually positive for it, which is pretty cool. Implied move is pretty bid, right? Pretty bid. 15.41%, and we're not even close to the event yet. So we can maybe see that, that might actually increase moving into the event. But what I'm thinking off the bat is we could go out, take a look at what the Iron Condor is, see how much we're actually paying for those wings, and maybe there's something we can do there. Steven, do you want to explain what you mean there? Why you think the Bed Bath & Beyond level of implied volatility is fair given coronavirus? Yeah. Okay. So let's see here. It's trading at 1875. So let's structure out an Iron Condor here. See what we can do. Straddle's going for $1.20. Okay. There's not much juice on this thing, to be honest. Yeah, there's no juice on this thing, but let's structure it out quick. See what we can do. 18.5 and 19. That's cool. Let's go up. Let's say $2. So 21. And let's go down $2. So 16.5. Yeah, you can see there's just not much juice on this thing. But, if stock stays between a range... Wait, what expiration am I trading here, actually? Shoot. That was a huge slip. So let's go to the 15. Okay, I'm going to have to restructure this. Give me a second here, guys. I totally forgot about changing the expo there. We don't want to be trading that near dated for it. So if we go to the 15th, and let's price out this one now. So we're still trading around here. Let's do a sell, a straddle. Okay, we're getting a little more juice here, $4. Okay, so let's sell an Iron Condor. All right, we got sell at the 19 call, sell at the 1850 put. Oh, it's not trading that. Okay, what if we go to 19? Okay, and let's say we go $4 in either direction. So that would be 23 here. It's not trading. Let's go 24. We'll push it out a little bit. And then we'll go 5 down. That'll put us at 14. Let's take a look at this trade. Okay, this is actually looking pretty decent. Our break evens are at 15.82 and $22. With the Christmas season rolling around, we'll probably see a little bit of reduced volatility moving into the event. But we have to remember, a lot of the vol being priced into this right now is from that earnings event. We have to keep that in mind. There's a huge move priced in there, 15%. And if we were to see, a blowout there, we have a decent bit of risk on the table. We're getting about 1.5 reward to our one risk. So we're risking just under 2,000 to make, maybe about 3,300. So, depending on your time horizon and your personal view on this company, this actually might not be a bad trade to put on. When we take a look at the terminal here, we can see that, the implied vol is extremely bid, right? It's extremely, extremely bid. Market's implying, a huge move. We think it's going to be 2/3 of what the market thinks. If we take a look at the implied volatility over the last month, we can see that spread just getting bigger and bigger, right? Realized volatility's come down. Implied volatility has stayed bid. We can expect most of the time we're going to see these small moves. And I think there's actually a pretty good opportunity to sell. Anyone have a differing opinion there or anything they want me to break down further about that trade? I'd be happy to do so. Right, if we take a look at the implied moves over the last events, right? Recently, back during early COVID stages, we were seeing a huge level of implied earnings move, right? 18%, 17%. And the moves were pretty much in line with that, right? We can see here over those last couple of events, there wasn't a huge tick up or down. So it was more or less evenly priced, including the last one too, where implied move dropped to 12. Now we're seeing it shoot back up to about 15, 16. But this is giving me a little more confidence because what I'm noticing is in recent times, it's not like it's blown out, right? So it's not like having this huge implied move and then it blows out and it's implying 15 and it moves 50, right? It's unlikely that we're going to see something of that nature. So I feel pretty confident going into this, to be honest. Eric, I'm not 100% sure how heavily shorted it is. Do you mind letting me know?
Yeah, we'll be on the phone.
Okay. Okay, let's keep our scan going here. We'll take a look at a couple of more trades. Anything in particular you guys want me to take a look at for you? What's on your radar today? All right, we can take a look at what's happening with Tesla vol. Everyone always wants to know what's the inside scoop on Tesla. So let's let that load up quick and let's see what's up with Tesla. So moved 2.62% so far today. Implied vols for the 30-day are at 96. So come down a little bit recently. It used to be, if we zoom in 1 month, we can see we are at 105 at one point. Huge implied vol for Tesla. We actually were short vol just about here. So our position's recovering. It's looking pretty good. But that implied volatility is starting to come down. Alex, how's it going, man? Good to see you on the live. If we take a look at the vol cone, we're still seeing near dated vol extremely bid. This is obviously related to Tesla being included in the S&P. We're going to start seeing companies or funds acquiring shares of Tesla in the near future. But how that's actually going to impact the stock, that's really up for debate, right? I haven't done a ton of research into it, but the news is out. The news is out, and we have to remember the market's smart. The market's really efficient. So, we could see a little bit more of like maybe an up move, but in terms of seeing a ton of volatility, I can't see us seeing this level of volatility in the short term, right? Who's really buying this stuff? Who's betting on this thing moving up, even though the news is already out, right? Wouldn't the market be reflecting that? That's sort of where my mind goes. But we all know it's Tesla. It's one that a lot of people stay away from. So if you're the one who's willing to go out and maybe sell this short dated vol, big risk, big reward. All right, that's exactly what this pretty much represents. You can see here that near dated vol is like through the roof and then it just gets crushed, right? They're expecting that big move now, and then we're going to mean revert, back down to about 75 vols, which is just a bit above the median, right? So if we take a look at what the market's basically saying is going to happen here, market's basically saying we're all the way up here right now for volatility. We're basically like COVID level volatility right here, right? Like this is March level volatility. Then as soon as this passes, we're going to see some sort of mean reversion back down into that range that we typically see for the company here. And that's really what we are looking for, right? So if you take that bet, you're hoping for the level of implied vol to come down, or at least that's what we were betting on. So we traded a little further dated. We traded the Februaries and the Januaries, betting on this line shifting down back into a range between here and here. But if you think that the stock's just not going to move because of this inclusion, well, you want to be trading more near dated, right? Where your theta is higher because your gamma is higher, right? When you sell that option, if you do get that big move, it's going to hurt. But if you don't, it's going to pay very nicely. So that's the trade-off based on what timeline or what days to expiration you pick. It's, do you want exposure to the level of implied volatility, or do you want exposure to the realized moves of the stock? Any other companies that we should take a look at? Let's see what's going on with Nike here. Maybe there's some trades we can take here. Okay. Let's go to news and sentiment. Is there anything happening around this that I should be aware of right now? Any of you looking at Nike right now? Sales are bouncing back. Okay. Did a big shift towards digital sales, and it's been the difference maker for the company. Okay, so let's open that up quick. Looks like Nike will have their earnings coming up. Go check that out. Okay, yeah, earnings are going to be end of this week, more or less. Are they releasing earnings on the Friday? Yeah, it must be Friday in the morning, I'm guessing. Let's take a look. Okay, time unknown. So we'll have to get a confirmation on what time they're actually releasing. Last live, they're all recorded, by the way. So if you want to go see what I'm talking about here, you just go to our channel and you can see it. We were talking about why we don't trade earnings over the weekend. So if a company releases after hours on the Friday or before market on the Monday, we're not trading it typically, at least here at Predicting Alpha, because you have too much exposure to the non-event volatility that comes with holding over the weekend. And we're really trying to optimize our exposure to the earnings event when we're looking at these kind of trades. It's showing after hours on TD. Yeah, so this is probably one I would stay away from. It's given the strategy that we run for it, it's just not worth adding to our portfolio. But if you're trading something bigger than just the earnings event itself, well, then maybe it's worth it, right? If we're looking at the 30-day vol here, it's pricing at almost 40%, right? 38.6% here. Where are the balloons? I'm missing out on the free alpha? Come on, Ned. We're short vol on Tesla right now. You're really going to say we got no balloons? We got no pants on Tesla. The balloons are too big to have pants on for Tesla. Right? We can see near dated vol, super pricey, but I'd probably be trading something a little bit further out if I were to take a trade on Nike. By the way, guys, when we're doing this analysis, we're really taking a look at the data here, right? For a trade like this, you want to do a little bit more research to see, okay, what's really going on here? Is there anything that I need to be aware of before I buy vol or sell vol? These are the types of things questions we want to ask ourselves, right? Who's going to be paying us if we sell vol here? Okay, what's going on with Work? Work just got acquired, right? I believe that's what happened with them. Snow. So I was talking to someone in the virtual trading floor community today, and they were basically saying they think it's a good buy for volatility here. And to be honest, it's looking pretty good, right? We have to remember this is probably one of the most volatile stocks on the market right now. And right now the market is underpricing volatility relative to what we are forecasting it to be. And including this forecast is the most recent earnings. But if we recall, it actually didn't jump much on the earnings event. The move was big, but the jump wasn't. So I think we could expect to see some more big moves for this company. Now, I don't personally have a directional bias on it, but buying a straddle around this may not be a bad idea. Depending on what your time horizon is, you can trade, the near dated's extremely expensive. I'd probably be looking at the 30-day to expiration. So if we go take a look at what that would be, let's have a look. So let's look at the Jan 15, and let's say we just buy a straddle at the money. Right, let's have a look. Right, it's a pricey trade to put on. This is not not for the faint of heart. Oof, having a bit of lag here. Right, so let's take a look. Right, we have break evens at 265 and 404. Right, it's a big range, right? But don't forget, this is a stock that moves like crazy. So if we see a break to either side of this, we're going to start making a lot of money really quickly. But we do have a big max risk here, right? This is not a trade that if you have a $10,000 account, you're probably not putting this trade on. It's way too much buying power. It's way too much of your account on one trade, and to encourage that on a small account would be, really poor advice. But if you have the sizable account, or if you want to really ride this trade out, you can throw it on in a paper account. Try to manage your deltas on it. If you want to stay delta neutral, scalp your gamma on it. It's not a bad trade. Right? I'm personally not putting this one on, but a few people that are members of Predicting Alpha will be throwing it on, and I'm excited to see how it plays out for them. So it is now 11:08. Things are a little slow today. We don't have any earnings to take a look at. There's a couple good trades that we got to break down today. FedEx was one that I'm going to really have my eye on today. I'm going to be really looking into that. Pfizer, we talked about that last week, but guys, there's probably some opportunity there for someone who has a little more experience in the vaccination field than I do. I don't have enough knowledge about that particular space to really comment on it, but vols are expensive, and if you have the inside scoop, might be a trade worth taking. So with that being said, that is actually going to conclude today's live. Remember, we do this every single day, right? We're here Monday to Friday, live streaming using the Predicting Alpha terminal, the only place to get real insight into the option space for the average trader. We take ideas and concepts from places like Bloomberg, build it out ourselves, gather our own data, and then throw it into this terminal for you in a user-friendly, visualized format, right? This is the reason why people pay $25,000 a year for data. It's so that they can get tens of thousands of dollars worth of information. It's so that they can get top-notch education and support, access to a community of Unreal traders, and all of that can be yours for literally $79 a month. Right? There are 65 people using the Predicting Alpha terminal right now. We are a small startup really trying to make a difference in this space. So if you found value in this, please drop a support. And if you want your own Predicting Alpha terminal, if you want support from Jordan and I and the community itself, check out predictingalpha.com. It's right there for you. Thanks a lot, everyone. And we'll see you tomorrow.